Welcome to TradingPennies.com Chart of the Week, where every week we will examine the trading strategy behind one of our explosive daily stocks picks. All of our strategies are covered in detail in our manual, Learn How Professionals Trade the Penny Stock Market, available on our site at trading-pennies.com. This week's chart is Ambient Corporation, ticker symbol ABTG, a manufacturer of wireless communications equipment within the technology sector. What caught our attention in this stock was the way it was forming a consolidating base above the 200-period moving average and into the ascending 20-period moving average on the daily chart. As noted in our manual, How Professionals Trade the Penny Stock Market, looking for trading opportunities as a stock pulls back and consolidates into the ascending 8-period or 20-period moving averages on the daily chart is one of our favorite and most profitable trading opportunities. In review, a consolidation forms when a stock's price movement trades within a range between two established boundaries, these can be trend lines, price points, etc., after a directional movement in the stock's price, whether it be a previous advance or breakdown. Consolidations visually take on the appearance of either a pennant, which looks like a triangle, or a flag which resembles a square or a rectangle, and can form within any time frame. The slope of the triangle or flag can be seen or have an upward or downward appearance. As a general rule, downward-sloping flags and upward-sloping pennants are considered bullish, while upward-sloping flags and downward-sloping pennants are considered bearish. Flat or level flags and pennants are generally considered bullish or bearish depending on the trend that immediately precedes their formation and therefore are considered continuation patterns. As a proper consolidation forms, it should also demonstrate a decrease in volatility, or the average price range for the time period is being viewed within, and a consolidating volume. As Ambient Corporation's consolidation neared the support of the underlying and ascending 20-period moving average, we placed it on our watch list. Before taking any position, we always perform multiple time frame analysis looking for potential resistance levels, as this is always a concern of a trader when determining the risk-reward potential for any trade entered. On the monthly chart, we saw multiple potential resistance levels. Our first concern was the immediate 0.04 price level, as it represented a prior price resistance level and the underside of the overhead and descending 20-period moving average. In Ambient Corporation's favor was that it surpassed and was consolidating above the flat 200-period moving average on the daily chart, which we view as more significant. Looking forward, we also saw the 0.06 level, a significant price level resistance, and the 0.11 level, which represented the underside of the overhead and descending 50-period moving average and a former significant price level resistance. On the weekly chart, we saw numerous potential resistance points. Like the monthly chart, the weekly chart also demonstrated strong price level resistance at the 0.04, and 0.06 level, with the 0.04 representing the upper boundary high of an uptrending price channel. We look at the resistance of the overhead and descending 200-period moving average at the 0.10, the 10-cent level, as very significant. This also represents the upper boundary of a broader range uptrending channel line, as well as a psychological level for penny stocks as they move from singular to double-digit price levels. As such, we see the 10-cent or 0.10 price level as significant. On the daily chart, we see the 0.10 to 0.11 price range as near-term resistance, as it represents the upper boundary of an uptrending channel. Another resistance level we saw was the 0.065 consolidation pattern price projection point. As noted in our manual, Learn How Professionals Trade the Penny Stock Market, the time frame in which a consolidation forms is important to traders in that it often predicts the future price target of the stock and the time frame in which it takes to reach that price target. In the case of Ambient Corporation, the consolidation that formed on the daily chart did so over a 10-day period. If we project 10 days back from the beginning of the consolidation, we see a price point of 0.01. We then subtract this from the high of the formation of the consolidation, in this case the 0.04 price level, and we get a target of a 0.03 price move, in other words a 3-cent price move. We then add this to the low of the consolidation pattern, in this case the 0.03 price level, to get the anticipated price target of the next advance at the 0.06 price point. At the close of January 27th, the price volume action appeared in favor of a continuation play as the stock consolidated above the rising support of the underlying 200-period moving average on the intraday 3-minute chart. Volume came in at the open, confirming our belief as the stock broke above prior price resistance levels of 0.04 and where we took our initial position. As always, once in a position, we turn our attentions to our exit strategies. To this end, we look at our multiple time frame analysis resistance levels and the price volume action of the stock on the intraday 3-minute chart. Towards the close of January 29th, the stock moved into the overhead resistance of the 0.06 price level. Being that we were going into the close and there was significant volume expansion going into the significant price resistance level, we decided to sell 70% of our position. On the morning of January 30th, Ambient Corporation gapped open, and due to how far it was extended above the 20-period moving average on the daily chart, we decided to sell the remainder of our position into the volume at the open. This, in retrospect, turned out to be a good decision. We put Ambient Corporation back on our stocks to watch list to see how well it would handle a pullback into the underlying support of the 8-period moving average on the daily chart, which we consider our first line in the sand per se. As can be seen, Ambient Corporation consolidated along and above the support of the rising 8-period moving average on low volume and low volatility, which is a good signal for further price expansion and forming what appeared to be a small bull pennant. Once again, we place this on our watch list and turn our attentions to the intraday 3-minute chart for entry signals. On the morning of February 11th, Ambient broke out of an intraday base on good volume and began to compress into a tight consolidation into the underlying support of the intraday 200-period moving average, forming an intraday cup and handle pattern. We looked to enter at a volume break of the high of the handle and did so going into the close that day. As always, once in a position, we turn our attentions to our exit strategies. To this end, we looked at multiple time frame analysis for potential overhead resistance price points. On the intraday chart, the first price point of resistance we saw was the prior spike high at the 0.075 level, and was a point we initially considered taking full or partial profits depending on the stock's price volume action at the time. As noted in our manual, Learn How Professionals Trade the Penny Stock Market. On an intraday basis, we look to the underlying support of the 200-period moving average on the 3-minute chart. We look to exit our position should this period be broken and close beneath by 2 consensus candles, or a closing beneath by a single expansion candle on significant volume. Ambient Corporation formed a tight consolidation beneath prior resistance and broke out on volume just after the open on February 12th, where we added to our current position. Being as extended as we were above the 20-period moving average on the daily chart, as we are, and taking into consideration the various overhead resistance levels noted previously on multiple time frames, we look to intraday chart analysis for help. In the first chart, we see an intraday uptrending channel project to the 0.10 and to the 0.11 or the 10 cent and 11 cents price levels, which coincide with numerous other resistance levels on various other time frames. What we saw and reason we exited 70% of our current position was the break of an uptrend line drawn against the lows of the price volume expansions in the middle of the trading session. This, coupled with attaining the price projection pattern of the cup and handle intraday breakout, followed by what could be an exhaustion gap and volume climax, left us uneasy going into the close holding a significant position. While we are currently holding above support of the intraday ascending 200-period moving average, we will use this as our trailing stop-loss point and plan to exit our remaining position should Ambient Corporation gap higher at the open. If we see the 0.10 to 0.11 level on Tuesday's trading, we will consider ourselves to be extremely fortunate. Until next week, from TradingPennies.com, this is Thomas McClellan, where our goal is to help you learn to become successful trading the penny stock market.